Hello everyone, welcome back. In today's video, I'm going to talk about a recent topic that I'm sure many people in the investing community would have heard about. And that is, in recent weeks, the small and amateur retail investors came together under a community called Wall Street Bets on Reddit to go long on a stock called GameStop, ticker symbol GME. GameStop is an American company that owns stores, many based in malls, that sell video games, consoles, and more. It was also once a place where millions of teenagers could trade their used games and discuss with GameStop staff on the franchises to get gaming advice. It used to seem like a viable and sustainable business model for GameStop. But fast forward to the digital age today, consumers prefer to just download their games off the internet, and this resulted in GameStop's business to be on a decline. This backdrop makes the recent frenzy in GameStop even more strange, with the turn of events caused by Reddit rallying investors to scoop up the shares. Within a couple of days, the market capitalization of the stock went up by 1,100% from $2 billion to $24 billion. Prior to this, many big hedge fund managers that are bearish went short on the stock. As the prices went up, some of them were even forced to close out their shorts by buying back shares that they do not own, and caused what we know as a short squeeze, sending the prices up even higher. So all of a sudden, it appears that the winners are the ones who focus on discussion groups and act fast, and not the professional traders who spend their time looking at balance sheets, business models, or the stock charts. The herd mentality in the Reddit groups led everyone in there to believe that the bubble is heading towards the moon, or some even say the Mars. And this is also because Elon Musk also appears to be in this game as well. Warren Buffett once famously said this: "A pin lies in wait for every bubble." And when the two eventually meets, a new wave of investors will learn some very old lessons. Speculation is the most dangerous when it appears to be the easiest. And in fact, this is not the first time that the stock market is driven by irrationality. So for those who are late to this game of musical chairs, they are likely to end up as backholders. A backholder is a slang to describe a person who holds on to a position of a security that declines in value such that it becomes virtually worthless. Watching the stocks that you once thought could change your life drop by 10%, 20%, 40% or even more can be extremely psychologically distressing. So how do you prevent yourself from becoming a backholder? While there is no clear-cut answer to this, there are at least two simple questions that you should ask yourself before deciding whether or not to buy a stock. Firstly, how healthy is the cash flow of the company? A cash flow statement of a company tells a lot about the fundamentals of a company. And in fact, the cash flow statement sometimes tell even more than the income statement, because there are certain inputs in the income statement that can actually be manipulated to paint a better picture for the company. If a company is unable to repay its debt obligations, then this could point to a potential problem with the company. Just think about this very simply. If a company cannot even generate sufficient cash flows through its operations to pay for its daily expenses, its debt obligations, interest expenses, and so on, then how can this company even continue to continue operating? Secondly, for those who think that you are not so well versed with numbers, then perhaps you can ask yourself this question: is the company currently or in the foreseeable future likely to be met with cyclical or structural challenges? A company with cyclical problems may still be able to do well in the right seasons or the right phase as long as it has pricing power. But structural issues can imply a more long-lasting problem for the company. An example of such a company is Nokia, which faces declining demand for its products. I do not know about you, but the point of investing or trading to me is such that I make money in a joyful manner at calculated risk. So if the odds are not in my favor, then I will not just simply jump into the game blindly. Reddit and other social media platforms can do this over and over again. And in fact, pump and dump groups are not anything new. So we have to be very careful here not to fall into such traps and lose our hard-earned money. We have to be very mindful and do our own due diligence when buying a stock. Understand the fundamentals of a company. Read the financial statements. Understand the business model of the company. If you want to know more, do subscribe and stay tuned to our channel for more of such content. Remember to stay true to the basic principles of investing and do not be lured by the hype. Do not fear about missing out on opportunities in the market. An investor's greatest strength comes from not just knowing what to do, but also knowing what not to do. This is how we'll all make money in an irrational market joyfully. Thank you for watching this video and stay tuned to my next video.